inflation has come down, but the perception of inflation has not necessarily come down in the same way. And that's because a lot of the prices of goods that people buy on a regular basis continue to rise. And consumers tend to focus on price levels rather than price changes. Now, as economists, we're all excited about the rate of change, which is the inflation rate. And the president is quite right. Inflation has come down in the United States. But if you look, for example, at the price of groceries, the price level of groceries continues to rise. And that's what people are focusing on, rather than, for example, the very modest decline you've had in used car prices. Because how often do you buy a used car? Even in the United States, it's not a high-frequency purchase.
So look, inflation hit a 40-year high in 2022, but as you say, it has cooled since the president took office, so he can take credit for that. Of course, though, the Democratic reply here largely zeroing in on what has been called a cost of living crisis in the United States. Yes, we have seen the cost of some things coming down, but at the same time, really hard to see how average everyday Americans are actually doing better in this political and economic environment. Do you think his economic message was actually credible, particularly ahead of the midterms where so much is at stake, not just in the House, but also politically for this president?
Well, the president has a challenge, as indeed President Biden did before him, that when we're talking about affordability specifically, affordability is not the same thing as economic reality. So you are in a situation where the inflation rate has come down, but as I've already mentioned, for a lot of high-frequency purchases, the visible inflation to many people, that hasn't come down so much, and price levels continue to go up. And so there is a perception of inflation that is notably different from the reality as reported by the Consumer Price Index. Secondly, wage growth has slowed in the United States over the course of the last year or so. And of course, a slower rate of wage growth means that spending power has been chipped away at. Now, consumers, middle-income consumers in particular, have maintained their spending power by drawing down their savings rate. So they've cut back on how much they save each month, and they've used that to pay for the tariffs and so on and so forth. The other issue, though, with affordability is that it's not just about what you think inflation is, what's happening with your income. It's about what you aspire to buy. It's about your perception of what you should be able to afford. And one of the challenges in the social media era is that you've got every 18-year-old TikTok influencer out there doing a get ready with me video, dressed in the latest designer wear, or buying their house and doing it up. And you're sitting there in your parents' basement wearing, secondhand clothes and thinking, well, why isn't that me? That also contributes to this perception that actually people are not able to afford what they want to afford. And that combination means that the perception and the reality aren't always exactly the same thing.
Okay, so we are perhaps operating in a market where perception trumps reality. I'm looking forward to seeing your get ready with me soon, Paul. Interesting point you make there. But let's also shift focus over to tariffs, because I think this was also central to the president's agenda. A significant blow for the president last week with the Supreme Court striking down key components of his centerpiece, trade policy. How much of a blow was that for the president? And is the trade policy in tatters?
Well, the president, I think, is very emotionally committed to tariffs. His perception of them is that they are a major economic tool. The personal impact, therefore, I think, is quite considerable. The president, as he identified, does have other powers to implement tariffs, but not in exactly the same way as the IEEPA tariffs that were put down by the Supreme Court. So that presents something of a challenge. And what we've now got actually is a period of uncertainty again in the financial markets, because we're not certain about whether rebates are going to be applied or when they come in, when US importers will get their tax payments back, as it were. We're not sure actually what the universal tariff rate is. President Trump over the weekend said it was going to be 15%. it's actually been implemented 10. So that creates a certain amount of uncertainty there. And of course, we've now got this threat of potentially punitive tariffs against individual countries, which the president alluded to, that he can sort of use other powers to do more extreme tariffs on certain goods and so on. And that also adds an element of uncertainty. And that really has been one of the issues around tariffs. The tariff effect itself, the US is importing very roughly about 10% of GDP. So we can, say it's important, but it's not the dominant part of the economy. But the uncertainty perhaps spreads a little bit beyond that. And I think what American businesses are really going to be looking for is greater clarity on the trading environment, the supply chain environment in which they're going to be operating.
And Paul, if tariffs were to substantially replace income tax revenue, as the president suggested earlier, what would that mean for consumers and investors in practice? Who actually bears that cost?
Well, if you were to see tariffs substantially replace income tax revenue, you would be talking for a start about a far smaller US government. Tariff revenues are a tiny fraction of overall income tax. So if you were to put in place tariffs, then you would expect to see a far smaller government. And also bear in mind that if tariffs do what the president hopes they will do, the revenue from tariffs will go down over time because the US will import less. So that would be a damage. Effectively, what would happen is that you would see a shift, and it depends on where the tariffs are applied. If you just apply to luxury goods, higher income consumers would be you're paying more in terms of the prices for their goods, which would find its way to the US Treasury. But if it's a universal tariff, then that would disproportionately fall on those who consume proportionately more of their income. That tends to be lower income households. So it depends on how it's going to be implemented if we're going to get there. But as I said, I mean, you were talking here about a very, very radical shrinking of the US budget, shrinking of the US military, shrinking of the US social security system, if you were going to try and fund the US government from tariffs alone.